500 and move to new all-time highs? We did. We get a CPI rally? We did. I told you that we would have the Fed reduce the amount of cuts for 2024 to 1 or none, catch the market off guard, and we saw that happen. Eventually, the market's going to sell off with that. There's a delayed reaction. So often there is with the post-Fed sell-off. More about that in this video. But narrative going forward is going to be, well, we're concerned about the soft landing now because the Fed is keeping rates too high for too long at a restrictive level. Going to tip us into recession. That's going to be the narrative going forward for the excuse on the financial channels in all likelihood. There are other tensions. Japan's reducing its purchasing program here, and that rattled the global markets. The French CAC selling off sharply in Euroland. Other things. Tensions now between the U.S. and Russia, with Ukraine now being given permission by the Biden administration to use weapons on Russian soil. U.S. weapons has moved warships 200 miles out of Florida there, off the coast of Florida. Again, it could be other catalysts that rattle markets, help rattle markets. It'll be this issue, but just know, again, the narrative going forward is going to be the excuse for the sell-off. The Fed's keeping rates restrictive level too long. They're only penciling in one cut. They're going to tip us into recession. And again, likely see a sell-off and likely a cut sooner than the Fed is probably anticipating. I think it's still possible that we see a cut as soon as September at the following meeting. But again, that's going to be the excuse for the sell-off concerns. Fed is keeping rates too high for too long at a restrictive level that they're going to tip us into recession. Well, NASDAQ and the S&P have rallied up, and they rallied up to new highs. The Dow hasn't, and it's got this potential double top, but it got a bottoming tail here in the form of a hammer. As they have been rallying, the Dow has been selling off over and over. Lows today was down triple digits again. So again, still could see a rally for the Dow to get a move up to the 61.8 Fibonacci in an ABC type of a move that I've previously have talked about. Dow, again, could possibly rally. NASDAQ and S&P start selling off, where the Dow plays catch-up, as I've said. The Dow's been leading the charge lower and higher, and remember, the Dow turned off its 50% retracement here. It may still try to get this larger move up. I think that's still in the cards for the Dow. You still have a strong possibility that we have a double top on the Dow. If we were to rally higher, you've got the possibility of forming a bear flag. Let me just draw that straighter. So again, we'll keep our eyes on the Dow, but a huge red flag, so is the NASDAQ, as I've talked about. Now, I'm going to be showing you the weekly charts, talking about the weekly charts, but real fast, I just want to talk about the NAIM Exposure Index, active money managers' exposure to the market, forming yet another divergence right here. We had one over here that marked this peak right here. We had the larger one here that is now forming, and we've got one in the more recent price action with the peak over here that's developing on the S&P 500. And again, very similar to the divergence that developed over here, are getting another reference point of a divergence in this peak right here. Again, I talked about this divergence with our previous minor high there in May, but told you we didn't reach the levels. We were still shy of them. I still thought we would go higher. And now that is forming this other divergence. And this is showing, really, money managers, this is showing you what active money managers are doing, and they're all in. So again, this divergence is likely going to produce a reversal, very similar to the divergences, RSI, the Osmo Oscillator, the MACD, and all the others that I've been talking about and that you'll see in this video. So you might want to watch this video all the way through. I got really important things to share with you. At 9 counts forming now. We got one on the S&P. We've got one that will complete on the NASDAQ on a Monday. Please support the channel with the link directly below. That allows me to be able to provide you this information. Follow the link. It'll take you to a secured site. You could donate any amount you want. Again, I don't have any sponsors. I turned all those offers down because I don't want to sell you stuff. I do need your help in order to make it work. I need you to partner with me. The charts, if you like the indicators, please consider partnering with me and helping out today. If you take a moment to do that, I would really, really appreciate that. Let me know that you want this information, that you like this information. by supporting the channel today. Make sure you check back on Sunday, posting another video. My signals remain bullish. I'll be showing you some of the signals that they're going to turn, but my signals remain bullish. Momentum is bullish. The trend is bullish. Divergences are looming over the weekly charts. Here with the NAAIM Exposure Index. Check back on Sunday, 7 a.m. Eastern Time. You watch this video all the way through. Important things happening next week. Okay, we got the back-to-back reversal candlesticks. Candlesticks mean absolutely nothing unless you get confirmation and a follow-through, which we did not get today's sell-off and rebound back up. We came down to this level and took out this low ever so slightly, but rebounded. We did not take out the low from the previous day. Got a shooting star, you got a hanging man candlestick, and now we get another hanging man type of a candlestick. Did close back below the upper Bollinger Band. There's still a possibility, because of the lack of confirmation here, that we can form the diversions that I talked about, go up and hit that upper channel line in the 60-minute time frame that I talked about. Thursday's update, I'll show you the chart. Here it is in the 60-minute time frame. I told you, again, it might be, and I went into great length and detail talking about this possibility on Wednesday and Thursday of a divergence forming the reversal candlesticks that we had on Wednesday and Thursday begin to play out. That is certainly in the cards right here. And again, possible diversions could form early next week, coming up and slamming up into this upper channel line. And again, we're connecting these levels here, but you got the high here, and that's parallel to this boundary right here. In the daily time frame, I'm connecting this low, and I'm excluding some of the shadows here, and it makes for a really nice rising wedge here. I've just connected this low right here, but in the daily time frame, if you exclude the shadows, you've got a really nice looking rising wedge there also in this larger channel. I've talked about both. Now, if we do go higher, confirm a 9-count sell signal that occurred on Friday. I talked to you about this earlier in the week. I told you it was a possibility to complete a 9-count on Friday. NASDAQ will complete one possibly on Monday. If that happens, the S&P can go up and perfect the sell signal, the 9-count sell signal. We have a 9-9 reversal pattern, but it's not perfected. Bar 7 is the high of the count. So keeping this in your mind, let's take a look at that daily chart again. If we go up higher and hit this trend line, we could get that perfected sell signal in the daily time frame. Now, before I go, we formed a bull flag now that broke out ever so slightly at the end of the session. We formed a little tiny bull flag right there, just like this one back over here. Okay? And I talked about the possibility that this 5-leg push higher is not done yet. We get another push up into this level, get this divergence. It looks like that's going to be the case. Break out of a little bull flag. Look at the 5-minute chart. We gapped lower. We got those back-to-back reversal candlesticks, but they were not confirmed. We came down to just below gap support again, just like over here. We came down to test that low. We got a higher low, formed a little divergence on the 5-minute chart, gapped lower, but then got back up and rebounded back up. Ended up getting above the 200 after dipping below it, the little black line right there, moving back to fill our gap. And we were just under, likely going to fill the gap. Guesses we're probably going to go upper channel line on the 60-minute chart, and you've got a breakout at the end of the day here of this little bull flag pattern. So that's what happened. And again, remember I talked about this bull flag back over here, and the one before that, corrections that we had, told you they'd likely lead us to that upper boundary on the weekly chart, complete the negative diversions on the RSI and the Awesome Oscillator and all the rest of it. Here we had the breakout ahead of the CPI. I told you that, again, we were going to rally with the CPI, talking about new all-time highs for that upper boundary of the channel. We never did reach it. Now we're there. We're making new all-time highs. Talked about the Fed lowering estimate for the rate cuts down to 1 or none, and that has now happened. Market was not expecting that. That's going to give us the next sell-off. Could be a couple things, but that's going to be the main driver in all likelihood. The bull flag completed, it formed, It broke out, and we're likely going to fill the gap on Monday and go higher. We're probably going to start the week off early, but we have options expiration. End of the week, we could have a reversal on our hands. Again, a post-Fed sell-off. I've been saying that doesn't mean the market peaks the exact day of the Fed. It means after. Post means after. Very common. I told you it's very common. The 2 following days after the Fed meeting or on into the next week. Very, very common. All that in March. Market peaked the next day. NASDAQ and Dow did. The S&P peaked the following week. Very common. Nevertheless, I digress again. That's the bull flag that I talked about on the 5-minute chart, and here in the 60-minute chart we broke out. Again, I think we're headed up to this area here. I think you completed diversions, and then I think we'll begin to retreat. I didn't know which way it would play out, whether with the diversions or whether we just see those bearish candlesticks play out immediately. They were not confirmed. The diversion scenario becomes very, very likely. And then it lulls people into a false sense of security. Oh, the Fed came off very hawkish, but it doesn't immediately respond, so they go, oh, it's not going to respond. Incognito. It's disguising. The retail investors push it up on lighter volume, and then they're going to sell into it and start more distribution. The institutions will. So keeping in mind that the 60-minute chart very well could form a divergence. 4-hour charts with futures look the exact same with the Awesome Oscillator. Because the candlesticks are not being confirmed immediately, we could still go higher. This could be a bottoming tail that could still try to take us higher again from the divergence on the 60-minute chart and to confirm the 9-count sell signal that we got today. We got a 9-9 reversal pattern. NASDAQ will get one Monday. Now let me bring up the sequence counts, and you can see that on Friday we got a 9-count reversal signal. The signal is not perfected. There is no P above it here, perfected 9-count, because it is not perfected because bar 7 is the high of the count. So it is highly probable that at some point next week, probably Monday or Tuesday or maybe both, that we push up and close or even have an intraday push above that level, go up and hit that upper boundary on the 60-minute chart. Once we get a perfected signal, then we'll be watching for a price flip for a bar to close below the bar from 4 bars ago, and that will start a reversal process in all likelihood. The stack will get the 9 count. It has 8 of a 9. It may not complete, but I think you got a pretty good shot that it will because you don't have a perfected signal here. And I was watching to see what would happen. Would we have bar 9 be the high of the count or not? I talked about this earlier in the week, and it was not. So it was something I was paying attention to. Once we get a perfected sell signal with the close above bar 7, a close to a new high, and again, we may do it for a bar or 2 or 3, and then get a post-Fed sell-off. Over here, we got a 9 count. Above the upper band, we went a little bit higher, but then it still produced the correction. Over here, we closed above the upper band, dropped back below it. We ended up pushing a little bit higher, 3 points higher, and again, gave the illusion that we weren't going to have a sell-off, and this was the day after the Fed meeting. I told you, again, to be watching for a post-Fed sell-off. We got it. NASDAQ and the Dow peaked that day. The S&P peaked the next week, which is, again, what we're probably going to see happen here. But then this followed. Now, again, these were corrections. This has a really good shot at being a reversal because you're getting major negative diversions in the weekly time frame on the RSI, on the Awesome Oscillator, on the MACD, and many others. Just a few indicators to name a few. Close to a new high next week will complete the 9 count on NASDAQ, but it will also complete a 9-9 sell signal here on the S&P. Again, the 9 counts, sometimes they play out immediately. Sometimes there's a delayed reaction. Here there was a delayed reaction, but then it still played out. Sometimes the counts don't finish. We only got to bar 8 right here. We completed it here. Start to sell off without perfecting the signal. Then maybe we just get to bar 8 on NASDAQ. But because we don't have a perfected sell signal here in the daily time frame on the S&P, I think you got a really good shot that you're going to get the 9 count completing there on NASDAQ on Monday, as long as we don't close below the bar. Close below the bar from 4 bars ago on NASDAQ, you'll complete that 9 count. And it doesn't have to be to a new high either on NASDAQ, because bar 8, the high, or bar 9, and we had new highs today on the NASDAQ. And if we just look at history, sometimes these counts, these 13 and 9 counts, sometimes they mark immediate turns, like right here. Other times you go a little higher or you go a little lower, depending on if you're in an uptrend or downtrend. Here we got these 9 counts, and we went a little bit lower in these cases. Here we completed the 9 count today. We'll probably go a little bit higher and get a post-Fed sell-off. And sometimes the counts mark, they show price exhaustion. Sometimes they mark bottoms or tops, like right here and right here. Other times, just short-term bottoms for counter trends. Up against major resistance, so again, there's a very good chance 9 count is going to mark a reversal point. But again, here you got a 9 count, you went a little bit higher. The counts tell us where price exhaustion is taking place. As we're forming our current 9 count that has not been perfected yet, and again, a possible 9-9 is a reversal pattern. There's a strong possibility that the divergence that's forming here could complete the reversal with the divergence those weekly charts. Now, NASDAQ moved to a new high, a new closing high here, and again, it did close above the upper band, Bollinger Band here, whereas the S&P closed below. But again, we have these possible head and shoulders on both the S&P and NASDAQ. The Dow has a possible double top head and shoulders pattern that already has the right shoulder on the Russell. I talked about that in great length and detail in Thursday's video. You can go watch that and see that pattern, which is diverging, and we have a divergence, a long-term divergence with the S&P and a short-term divergence in the more recent price action. The Russell's made a lower high once again, and the S&P is making a higher high. Here we have an 8 count on the NASDAQ, a 9 count. We get a doji or a topping tail or something like that, but we could go higher and then get a reversal starting that could eventually take us down here into July or September. And if that happens, you've got a really good shot at a head and shoulders pattern, possibly a miniature one right here. Whether that will play out or not, we'll see. With this possible head formation, we have a 9 count again that was still followed by another 9 count that ended up giving us a pullback, even though it was not perfected. So now we have another 9 count. This one gave us, these two right here gave us a correction. This one will likely lead to a reversal, and I'll be watching for a close back below the upper Bollinger Band. And again, eventually come back and fill the gaps down here, these gaps, and ultimately move towards this low and this low down over here. And again, our May 3rd gap, which the Dow, giving the warning signs, the Dow already filled this gap. The Dow moving to new highs. Now there is the Russell, huge red flags. We have these potential head and shoulder patterns on the S&P and NASDAQ, and the right shoulder on the Russell already developed. The Dow has formed a potential double top. Watching to see what becomes of these counts. And again, sometimes they turn immediately, sometimes they go a little higher. But as I've said, we're at resistance levels in the weekly time frame. We've overthrown the trend lines a little bit, forming negative divergences everywhere. These counts are showing price exhaustion. But the S&P has not perfected its 9 count sell signal, so I think it will go higher and form that divergence on the 60-minute chart. And I think you'll see the NASDAQ go higher right here, in all likelihood, to complete the count. That got a candle of indecision on Thursday, or a sloppy hanging man candlestick, not confirmed. We went higher. We'll be watching this bar. Again, if we go higher and we get like a doji cross or something like that, or a spinning top or something, or even if we go higher and then we start to turn, you could get a dark cloud cover candlestick. We'll be watching to see how it unfolds, and then I'll be looking for a close back below the upper Bollinger Band next week. Again, we're probably going to see a rally at the beginning of the week and a sell-off probably by the end of the week with options expiration in all likelihood. A rally at the beginning of the week because I think that this count will likely complete, and I think that the S&P will likely get a perfected sell signal closing to a new high, or an intraday push to a new high. It has to push to a new high above bar 7 to have a perfected sell signal. Okay, once we get the 9 count perfected on the S&P, if that is going to be the case, and get the 9 count here, again, we'll be watching for a price flip. If you get the 9 count, you go a little higher, and then you get it. Sometimes it turns immediately. If we turn immediately, you want to see a close below the bar from 4 bars ago. We'll start a new count in the other direction and be a price flip We get, say, a doji or something, then you want to be looking at the bar on Tuesday, the bar from 4 bars ago. You'd have the Monday bar, be bar 1, 2, 3, 4. Then you'd be looking at bar 6 that you'd need to push below to start price flip a reversal. So let me just show you where I think we are headed on Monday here on the NASDAQ. And again, got this channel here that I've drawn here. And again, I think we're about to complete the divergence, pushing up. Again, NASDAQ went higher today. The S&P did not. I think the S&P will go higher. I think the NASDAQ will go up here, maybe even overthrow this level a little bit, but then turn. And then we have this channel in the channel right here that I think will end up breaking that trend line and complete this divergence right here with momentum. You've got this divergence right here that created a peak right here. This divergence with these two highs. I think you're about to complete another one. We are moving to a new high, so you are getting a divergence. Just don't think it's done yet, and I think that will give us a 9 count. And again, if we get a doji or something like that, maybe we even overthrow this level but come back down. But I'm going to be looking for these divergences to complete in all likelihood Monday, Tuesday, but early on next week. I think that we're going to complete this. Probably pretty good shot of doing it on Monday. And here is the RSI. Look at the RSI. And the MACD, again, I think the MACD down here is going to turn up. The RSI already is here. I think the MACD will turn back up. You'll get this little divergence here, and then I think it's going to be curtains. Again, maybe we go and overthrow this level a little bit. Maybe we hit it and turn. We'll see what happens. But I told you earlier in the week to be watching. Do we get a divergence on the RSI, or do we turn? Now forming a divergence, you could have gotten either one. Went into great length and detail talking about this Wednesday, Thursday, about the possibility of a divergence. Forming on NASDAQ, S&P will probably move to new high, get the same thing, but then turn surrounding this area here, complete the 9 count in the daily time frame on NASDAQ, perfected sell signal on the S&P daily, and then again, we could see those divergences begin to play out next week with options expiration with the Awesome Oscillator and the RSIs in the weekly time frame. I can also change the angle of ascent and just take this low here and this low here, connect them, and this peak right here and this peak right here, not going back to over here, but just connect these levels. And again, we didn't quite reach that channel if we just connect those levels. But again, whichever way it plays out, you've got a divergence forming here, likely going to play out next week. And again, so I think you're going to start a turn, and the divergences in the daily time frame will spill over and allow the divergences in the weekly time frame to begin to play out. This is the NASDAQ daily. Same divergence forming here with momentum on the S&P 500. It's probably going to roll over next week. Again, we had the Fed day with the topping tail. We got these reversal candlesticks. They did not get confirmed. We're likely going to go back up and hit this upper boundary again. And again, channel I'm talking about in the 60-minute time frame is here. With these lows back over here, but like I said, if you exclude the shadow, you've got a really nice looking rising wedge here in the daily time frame. So again, I think we're going to go higher and then start a reversal and complete this divergence. And again, you could have a one-day reversal, or you can go get a doji or something on Monday and start a reversal Tuesday, or Monday or Tuesday and start a reversal Wednesday. But it could be we sell off by the end of the week with options expiration. I think that is highly likely that we get a post-Fed sell-off, just like over here. Again, we had the peak the day after the Fed. We started to sell off and then, went sideways. We're going sideways right here, had some sell-offs, but then we're rebounding. Here we rebounded. We went 3 points higher, and you formed a little divergence on the intraday charts that gave you that little miniature double top. I think we're going to go slam up into this trend line right here. And again, the same trend line that I was talking about on the 60-minute chart, just a rising wedge here, excluding that shadow there. These divergences forming here on the S&P daily, on the NASDAQ that I just showed you. We don't have a divergence on the RSI. We do in the weekly time frame, but not here in the daily. But we have a divergence developing on the MACD and other indicators. Momentum, I just showed it to you. Things like the money flow and so forth. We did get the stochastic rolling over today. So again, I think we got a good shot that we're going to see some volatility next week. Could still go higher. NASDAQ tries to complete the 9 count and S&P tries to perfect it. You've got this divergence going on with prime parameter, again, suggesting that we're about to have a reversal, similar to the divergences that are forming in the weekly time frame. Clearly have divergences in the weekly time frame on the RSIs. We do not have a divergence in the daily time frame on the RSI. We have divergences on other indicators, but we're moving to a new high here and on the MACD in the most recent price action. We don't have to form a divergence, but it's possible it forms after a sell-off. Keep that in mind. Over here, again, we formed this divergence. We had this peak and we went a little bit higher, completing the divergence. We could see something like that going forward. Other times you don't get a divergence. Was no bullish divergence at the April low here on the RSI. So again, you don't have to get one, but you can. Again, I think it's likely we're going to turn and eventually make our way down towards this 17,000 area, and you got a good shot of a head and shoulders if that is the case. The stochastic also rolled over today. We'll see if that amounts to something, or did we kind of go flatline to buy a little bit more time? Complete the 9 count. We'll be watching the sequence count closely for that 9 count. Meanwhile, the VIX gets back-to-back inverted hammers, potential bullish reversal candlesticks. Did close back above the lower Bollinger Band today. We'll see, again, often, and the VIX has made a higher low. Oftentimes the market will, the VIX will bottom before the market tops, which, again, we're not moving to new lows. Well, the S&P has moved to new highs, and very well could move a bit higher next week. 8 weeks ago, I told you we very well could have a bottom at the 20-week moving average, go back up and get a lower high like we did over here, or a higher high like we did over here, and form a divergence. And I told you we can go up and slam up into this trend line or even overthrow it. I've talked about this at great length of detail. If we made the higher high, we can form a divergence, much like what we had back over here. That is the case. Divergences on a lot of indicators. A high probability we're going to begin to see this turn, and you got a pretty good shot that it could happen with options expiration next week. A post-Fed sell-off. Close the week strong. I told you, watch to see if we close strong, or do we close below this trend line. I told you we might overthrow it. Here, told you the channel could adjust by exclude the shadow down here and go a little higher. We may even go a little higher here. We're watching to see if we reverse in this general area. Again, the divergence is going to complete and we're going to turn down because the market takes its time doing what it's going to do. We have to watch for the divergence. I've been telling you we're going to new highs. We missed it over here. I told you we were going to go to new highs with the CPI. We're going to close above the upper Bollinger Band on the daily chart. We did all that now. Now we're up here. Now it's time to be watching for a potential reversal. And again, complacency has had extremes again. This divergence is going to play out just like this divergence played out over here in the lower high and the bullish divergence down over here on the S&P weekly chart. We not only have the divergence on the RSI, we have it on the MACD. Other indicators have it all over the place. It's everywhere. The weekly time frame, you've got it on the Awesome Oscillator. I expect that we're probably going to see a red bar either next week or the week after that. You may start the reversal and still get a green bar. Dow did that. Remember, S&P and NASDAQ have been going higher while the Dow has been selling off. The Dow is getting a bottoming tail there on Friday. Be surprised to see the Dow get a bigger rebound, yet NASDAQ and S&P start to reverse. Dow is nowhere near new highs and it turned down sharply. Wouldn't be surprised to see it try to go higher. Again, giving the illusion Dow's way up, but yet getting a reversal on the NASDAQ and the S&P 500. This divergence, we're probably going to see a red bar next week or the week after that. And again, you'll likely see a reversal start with options expiration in all likelihood next week. You got a pretty good shot of it anyways. But like I said, again, warned you before the Fed meeting. You're going to see a post-Fed sell-off, but there could be a delayed reaction. Because of that, then people go, oh, it's not going to happen, and then it does. Post-Fed sell-offs happen all the time. Sometimes later in the week, the Fed meeting, sometimes the following week, or shortly thereafter, but it's likely going to happen here. And these divergences look like they're about done. P weekly here, NASDAQ weekly here. Again, we had a strong close. Move a little higher to complete the 9 count next week in the daily, but you've got this divergence going on. And on the MACD here in the weekly time frame. So again, I'll be watching to see if we start a reversal. Maybe we close next week out with the doji and get the reversal right after that. Reversal starts next week with a topping tail with a doji candlestick. It could play out a number of different ways. In the next 2 weeks, we're likely going to see a red bar right here on the weekly chart of NASDAQ as well. I want to remind you the signals remain bullish in the daily time frame. We'll need to see those signals turn if we're to get a reversal here in the weekly time frame. The signals remain bullish. As long as the signals remain bullish, we can go higher. We are hitting some resistance. Now, this is a linear scaling. I've talked about the trend line here excluding the shadows, and again, we're slamming up into that, just overthrowing it ever so slightly. If we include the shadows, we're just below it if we draw a parallel boundary to the lower boundary over here. So again, you got a channel, got the diversions here, and again, very similar to the diversions that we had back over here. The diversions here gave us a correction. We had the diversions here that gave us a correction. This divergence is likely going to lead to a much bigger sell-off, potentially a reversal. It's not just on the RSI and the Awesome Oscillator, but you've got it on the MACD and other indicators. We also had, with the log scaling, a rising wedge here, and again, we've slightly overthrown that. I told you we might go up to it, slam up into it, or overthrow it. Wedges have a history of overthrowing, as I've talked about. We've got the divergences here, forming just like back over here, just like at the bottom. If these divergences marked a turning point, this one will as well. We closed strong for the week. We closed strong with NASDAQ being helped by NVIDIA and Broadcom and Tech. Closed up 3.47% for the week. We closed higher by 658 points. So we closed strong. Watch. Did we close strong or do we close weak? We're watching as we go into options expiration. Do we get a reversal bar, weekly time frame? Do we start a reversal process in the daily time frame? As I said previously, we may hang out here, then turn. The divergence will play out. As we go into next week and the following week, I'll be watching the signals. Do the signals begin to change? Does momentum turn back to bearish? Right now, momentum and the trend, the signals are bullish. Watching to see if they change. Just remember that the market has been moving with the Fed meetings. Fed meeting is either going to produce a top or a continuation. There's a lot of resistance here, long-term resistance. On a term, we need to see the signals begin to turn bearish. Right now, the signals remain bullish, so keep that in mind. Showing you the signals each day. You can see it in my Sunday update on Sunday, 7 a.m. Eastern Time. Happy Father's Day to all you fathers out there.